at the United States stock market. Now, long-term investors have been advised by some ardent investors that this is the time, absolutely the time to buy right now, and saying that the stock markets will return to their performance and, of course, gain some bit of interest on the investors. However, of course, some investors disagree with this, saying that it could take 10 years or even more for the stock markets to recover in the United States. Now, the S&P 500 declined on Friday, closing the day with about a loss of 2.8%, with about a value of 3,639.66 United States dollars. The Dow Jones also declined by 2.11%, closing at 29,296.79 US dollars. The Nasdaq Composite declined by 3.8% by the close of Friday at 10,652.4 United States dollars. The Russell 2000 likewise declined by over 2.87%, closing with 1,702.15. Now, these are the biggest indices in the world, and they're looked at as the benchmarks of mainly the performance of the United States economy. Currently, the economy in the United States has been hit by inflation, just like the entire globe. And currently also the central bank there, that is the Federal Reserve Bank of the United States, has been hiking the central bank interest rate. And this has led definitely to shading off of the stock market there in the United States. But what is the opportunity created? And we always want to share the picture that is kind of optimistic, because the stock markets can really be a disappointing market if you are a short-term investor. And this is exactly what I've always mentioned here again and again on the show. When you want to invest in these markets, come with the perspective of a longer term investment. If you come with a short-term mindset, you're going to face it very, very rough. It's going to be a very tough market for you. You're going to get ulcers and stress and so many other disorders that you might actually have to pay for in order to treat. But it is as simple as be a long-term investor. Have a long-term vision. Invest for the next 5 years. Invest for your children. Invest for the next 10 years. Because right now, I'm telling you the truth, is that many people are making losses because they are panic selling. Panic selling is one of the worst things you can do when it comes to the stock market. You know, you go online and you check out what the S&P is doing, what the Nasdaq is doing. Oh, on the USE, you go and see that Stanbic has lost this much, and you start selling off all your stock. It is wrong, absolutely wrong. But of course, I know and understand, of course, given the tough economic times, you might have a need or an urgent need for the money. And of course, it's inevitable that you must make that loss. But if you can hold on, please do, because you will definitely not regret when it comes to a long-term perspective. And according to Mr. Jeremy Siegel, who is a professor of finance at Wharton School of Business, he told the CNBC that if you are a long-term investor, you should absolutely buy right now. And he says that he thinks these are absolutely great long-term values that he's seeing on the stock market there. Now, one of the reasons behind this year's US stock market slump has been inflation. The consumer prices were rising at their fastest pace in the last 40 years. And while the headline consumer price index number has cooled off a little bit recently, August's inflation rate was 8.3% over year, meaning for the last 1 year, the consumer price index for August, yes, was at about 8.3% increase. And it's still worryingly high and increasing. It's still going. Now, to tame the inflation, the Federal Reserve Bank, which is the central bank of the United States of America, is raising the rates on the central bank rate aggressively. And the central bank rate, which is the benchmark, has been increased by 75 basis points within the last 1 month, marking the third such increase within the last about 3 or so months. Now, if rampant inflation continues in the United States and in the global economies, the central bank rate is expected to even be increased further, and this will further still affect the stock markets, and they will not bode well with this kind of trend. Now, Siegel Jeremy, who is a professor of finance at Wharton Business School, he continues to say that he points out to one segment of inflation that is cooling down, and that is housing. But that isn't properly reflected in the index numbers there as well. He says that we pointed out, and I quote, we pointed out that the way these indices are constructed, the housing costs are very lagged, and they are going to continue to go up. And even though, as we saw in the Case-Shiller housing index, the national housing index, housing prices are going down, he says. Now, Sieg also suggests that instead of making decisions based on the lagging indicators, the Federal Reserve has to be looking forward to the future. And he says that they have to look at what's going on in the market, in the housing market, in the rental market, and in the commodity market, if they are to tame inflation successfully. Now, all these effects are shedding off here in Uganda, in East Africa, and the globe as well, because the moment the bigger economies are facing these challenges, definitely we will feel the pinch, because we sometimes depend on them, if not most times depend on them, especially in terms of importing some of the things we cannot manufacture here at home. And so definitely this has shed off here in Uganda. Putting for example, the stock markets in US aside, when we look at our own stock market here in Uganda at the Uganda Stock Exchange, we realize still a very significant decline was also registered on the stock exchange on Friday. And within the entire week, we've seen mainly the benchmark index, the all-share index on the Uganda Securities Exchange, deeply in the red, meaning it has been declining for several days in a row this week. The central bank rate, like I mentioned in the first segment of the show, also was hiked by 100 basis points from 9% to 10%. And inflation has now acquired a double digit at 10%, right? And so this is really where you have to sit down and do your maths very well. How am I going to use the little money I'm earning at my job to be able to secure my future, to be able to be saving, working, fending for my family, and still survive these financial times? Have a longer term vision. And that's what I advise you. That's what most people who have survived such times will advise. Invest for the long term. Be forward looking, look into 10 years, 5 years from now. Don't be blurred. Let your image not be blurred by what you're currently seeing in the figures. Otherwise, it's not going to last. It's a temporary effect, but we have to bear with it, and we have to successfully maneuver this financial crisis. Now, on the Uganda Stock Exchange, turning to our own stocks here in Uganda, on Friday, our markets open on Monday and close on Friday for the weekend. On Friday, we had the all-share index decline by over 11.23 points in a day. And this was close to 1%, but 0.91% daily decline there on the Uganda Stock Exchange. And the day ended with over several gainers here on the market. We see that we had about 3 participants who participated in the equities market here in Uganda, and 5 gainers and only 3 losers. Now, the gainers were led by MTN Uganda, who came in with a 1.09% price appreciation, closing the day with a price of 185.00 Ugandan shillings. And highlighting the MTN stock, if you were following the markets throughout the week, MTN declined from Tuesday to Wednesday, Thursday, and it picked up the price there on Friday. And that's what I like about stocks like MTN, because you know that today the company is going to decline, but it won't take long for it to regain its momentum. So it's giving you kind of a window for people to get into the market, new people in particular. And this is what I see always, even on the stock market in the United States, when it's the way it is right now, in the deep red. It's giving opportunity for new investors to come into the market, because this is the best time to get in. But of course, this is so hard to make people believe that I have to board a sinking ship when the sinking ship is just about to disappear into the waters. Now, that is very, very hard to convince someone to get onto such a boat. But usually, that is the boat that is going to actually get you to the shore. And so it's kind of difficult, but you must be willing to make a sacrifice. You must be willing to make the bold step of stepping up in such economic times, because those opportunities don't come very often. So MTN, like for example, last week declined to about lows of about 183, 184. Now it's at 185 closing price on Friday, meaning people who got in at 183 on around Tuesday still have a 2 shilling gain on their price. That is value. You might think it's insignificant, not until you have 1 million shares. That would mean you're making 2 million off of your share. You're making 2 million shillings, because 2 shillings multiplied by 1 million, that is 2 million shillings. So you must be, that painstaking and looking into the market with a critical eye and spotting the gaps and seeing how you can fill those gaps wisely. Of course, you don't do this out of impulse or out of excitement, but with knowledge and calculated steps. Now, MTN Uganda was not the only company that gained, but we also had Nation Media Group, who gained by about 0.55% on the stock price, and KCB Group gained close to 0.45 on their stock price there on the Uganda Stock Exchange. And Centum Investment as well gained about 0.39% on their stock price at the Uganda Stock Exchange. Now, looking at the losing side, had rather a very interesting drama here from the big boys in Kenya. Equity Bank coming at the bottom with an end of day price depreciation of close to 3.31% on their stock price, closing at 1,412.28 Ugandan shillings per share. Now, the Equity Bank Limited was also followed by East African Breweries Limited, who lost rather close to 2.19%, and Kenya Airways, who lost close to 0.07%. By the talking about Kenya Airways, recently in the rankings of airlines in the world, Kenya Airways declined in performance compared to last year's rankings. It ranked the 81st out of the top 100 airlines that were ranked worldwide, and this was declining from 79th position last year to now 81st position rather in this year's rankings. And Ethiopian Airways led the companies here in Africa, airline companies in Africa, being in the 26th position amongst the top 100 airlines of the year. And the airlines were led by Qatar Airways there. Of course, COVID-19 pandemic, inflation, high prices of fuel, among other factors, could be some of the things that slowed the growth there in the aviation industry in Africa, particularly for Kenya Airways there, which was already struggling with debt way back in 2018 and other subsequent years there. But regardless, we celebrate Ethiopian Airways. I think it's one company that still managed to make a profit out of the COVID-19 pandemic, and that is kudos to them right there, Ethiopian Airlines there. But as well as Kenya Airways, we hope in the future for a better performance and, of course, better governance, better services, and seeing that we survive these economic tides. And of course, this will require both your participation and mine and the governments and everyone to see that we remain firm as African financial institutions and African companies here in Africa. Now, other companies here that had some kind of movement was Stanbic Bank. Stanbic Bank currently has been one of the most traded on stocks, and he maintained that on Friday, coming out as the top mover with a total of 123,700 shares that were garnered by the company on that is on Friday's trading. And Bank of Baroda also was a top mover there at 41,200 shares that were traded on the stock market on Friday. MTN Uganda had a rather smaller margin of about 535 shares that were traded on the stock market on Friday. Now, after this analysis, of course, we always want to look at the all-share index, which gives us an average picture or a general picture of what the stock markets look like. Now, regarding the performance of the benchmark index, it declined by over 11.23 points, and that was a 0.91% decline in the daily performance of the all-share index here at the Uganda Stock Exchange. Now, in terms of 1 week, the all-share index has lost close to 3.34%, and in terms of 4 weeks, that is 1 month, it has lost 5.71%, and an overall year-to-date loss of 14.05% is still at the back of the Uganda Stock Exchange. The local company index, on the other hand, increased by 0.63%, all thanks to MTN stock that accrued a little value on each stock, being a top gainer there for the day. And currently, the local company index stands at 273.04 points. And this is a 1 week gain of 0.61% and a 4 week gain of 1.4%, but still on a year-to-date loss of 15.9%. Meaning recently, the local companies have put up a good show so far, at least on the stock market in Uganda, as we close into the fourth quarter of the year. And of course, we are seeing much more activity still, as usual, on the local stocks here in Uganda. So it's a good thing that we have our companies here in Uganda having at least a lion's share of the exchange. But we are not still impressed with the numbers. Recently, of course, as the USE was celebrating the Women in Investments Week, that is the Investments Week rather, which had women in investments and how capital markets can actually empower the women's agenda, you know. So the chairman of the chairman of the Uganda Securities Exchange Board, Mr. Byarugaba Richard, who also doubles as the managing director of the National Social Security Fund, he said that the 130,000 investors we have are not to be celebrated at the moment. Yes, we have grown from 30,000, which was the stagnant number a couple of years ago, to 130,000, but we can still do better. I mean, 25 years of an exchange and you just have 130,000. We could still do a little bit more. And I agree with him on that point. We still have a lot to do as the capital markets of Uganda, together with the regulator, the Capital Markets Authority, with the lawmakers in Uganda, with you and I, the normal people. We have a lot to do to grow our markets. As business owners, have you thought about listing your company in order to get this very cheap capital rather than going to borrow expensive loans from banks? This is the way you can contribute. And have you thought about buying shares in companies like National Insurance Corporation that have as low as 5 shillings worth of a share? Have you made research to know why you shouldn't invest in this, why you should invest in that? I think this is what we need to do and become more aggressive towards our market if we are to see our markets grow and thrive as well. And hopefully that gives you a picture of what took place there on the markets in Uganda. The markets are open as I speak, and you can be able to trade on the stock exchange in Uganda by, of course, dialing *165 *57 hash on your MTN and opening an SCD account and getting to call one of the stockbrokers that are licensed by the Capital Markets Authority to make your trade. We're taking a quick breather. We return with our last session and we will look into the summary of the USE trade and crossover to Nairobi. And of course, as we wind up, stay with us. We'll be right back.